MST is like MSTY, but on steroids. It's basically ultra leveraged Bitcoin exposure with a weekly income stream. So, should you buy it? I'm Ethan, CFA Charterholder and investment professional, and today I'm going to help you decide. MST is definitely not for the faint of heart. That doesn't mean it's bad, but it does mean you should make sure you really understand how it works before investing. The CEO of Defiance, the 7-year-old company that launched it, said retail investors want the thrill of leverage and the comfort of income. It's only been out a few days, but I would bet this ETF is going to offer investors a lot more thrill than comfort. So let's dive into how it works, how it differs from MSTY, and what investors can expect from it. It starts with Bitcoin. You don't know what Bitcoin is, right? And Bitcoin is already what most investors would consider an extremely high risk reward investment. Then comes MicroStrategy, ticker MSTR, which is now just called Strategy. Strategy was a failing tech company that decided a few years ago to just start buying a crap ton of Bitcoin. Big asset managers generally aren't allowed to buy Bitcoin in their funds. So MicroStrategy became a way to get access. Bitcoin went up a lot, and Michael Saylor, the CEO of Strategy, basically struck gold, but better. For reasons I've explained in a prior video on MSTY, so I won't rehash them here, Strategy's stock basically trades like a leveraged Bitcoin position. So Bitcoin was already super volatile, and Strategy's stock trades basically like a leveraged version of it. Then enter MST, which is a leveraged version of Strategy. That's like a super leveraged version of Bitcoin. Let the games begin. MST has two basic components and objectives. Number one is leveraged strategy exposure, which aims to deliver about 1.5 to 2x of Strategy's daily performance, up or down. Number two is call spreads on Strategy's stock, which are designed to generate weekly income payments. So let's start with the first part. They do state that sometimes their leverage might be significantly different from its target range, either lower or higher. So if you thought the results were uncertain before, it's even more than that. But let's take a look at the first few days and say how it's done at achieving its 150 to 200% target of Strategy's returns. Day one, down when Strategy was up over 3%. Not off to a great start. Day two, about 1.5 to 2x worse on the downside. That's what it should do. Day three, not quite in the range, but close enough. On a really flat day, you never know what's going to happen. Day four, in the range of expectations on the upside. And I'm not going to go one by one all the way, but here are the others you can look at. It's generally been in the expected range most of the time. Granted, in a very small sample size, so take it with a grain of salt. However, that's a daily target. The best and worst thing about leveraged ETFs is that they compound the upside and the downside. Also, in a flattish, choppy market, they're likely to underperform. That's not specific to MST, it's just how the math works on leveraged ETFs. You can see that in the week and a half since inception. Strategy's stock has been up 4%, which means MST should be up around 6 to 8%, but it's actually down 1%. And it hasn't even paid out a dividend yet, so we can't blame that. It won't always be like that, but that's a risk you should be aware of. When it comes to the income side, it's hard to evaluate since it hasn't paid a dividend yet, but here's one thing I do like, which is also the first of two key ways it differs from MSTY. The YieldMax NSTR Option Income Strategy ETF. NSTY in black has one objective, to generate an ultra high level of income. It does so by selling call options on Strategy's stock. MST in white mainly seeks long-term capital appreciation, and income is only a secondary objective. That's why they use call spreads instead of just writing cupboard calls. So what's a call spread? I'll show you using MST's holdings as of May 15th, 2025. You see on the bottom, they've sold 851 call options on Strategy stock at a price of $425 and another 46 options at a price of $435. You know they sold them because the amount of options on the right is negative. That means they're collecting a premium, which is where the income comes from. But if Strategy stock goes over $425, they give up any gains past that point for most of the shares. If it goes above $435, they give up the rest of them. In MSTY's case, that's all they do. That's just selling call options. A call spread, which is what MST is doing here, is completed by also buying call options at a higher price, which in this case is 460. They all expire on the same date, and they've both bought and sold a total of 897 options contracts. So what that means is that they don't give up all the upside. They only give up the upside between 425 or 435 and 460. But if it goes up higher than 460, they start capturing that upside again. They give up some income that way since it costs money to buy those options at 460, but it helps avoid the major downfall of MSTY, which is that it caps all of its upside potential beyond the strike price, which is that 460 number. Of course, highly volatile stocks like Strategy often get a lot of their upside in short periods of time. So it may not be visible day to day, but over a couple years and a couple big downturns and recoveries, MSTY is likely to lag significantly. Its income is completely unsustainable, and I think people who get pulled in by that 100% plus yield are going to be totally blindsided by the massive NAV erosion that's inevitable and falling yields. But I've belabored that point enough in other videos. MST, well, it hasn't paid a yield yet, but I would expect it to be much lower than MSTY's. If that's main focus and they're using call spreads instead of just sewing calls. I also think that, along with the leverage, may solve the problem of NAV erosion over time, even if you're taking the income out. I say that with the caveat that I don't really know how high the income will be. It may still be unsustainably high. Knowing Defiance, it probably will be. But even if it is, overall, I think it's likely to be a better ETF than MSTY. And if you're reinvesting the income, even better. But being better than MSTY is a pretty low bar. That's probably the worst ETF I've ever come across. So, should you invest in MST? Well, I have no desire to myself, even though I'm very comfortable with leveraged ETFs and Bitcoin. But I won't deny that it could generate incredible returns if Bitcoin and strategy stock do well. But doubled leverage on something that has blown up multiple times before in its short history is an ultra high risk reward proposition. I think there's a near guarantee that at some point in the next 10 years, if this ETF survives that long, it will have a peak to trough loss of 90%. There's also a near guarantee that it would have a 1 year period where it's up at least 100%, maybe a lot more. But if you go down 90% and then you go up 100%, you're still down 80% from where you started. So if it were me, I definitely wouldn't view this as a dump all my money into it, buy and hold kind of investment. I'd start small, add on significant weakness, and sell on significant strength, all while knowing you're never going to get the timing right. Just my personal opinion here, but that's the only way I feel comfortable investing in leveraged ETFs, and it's how I've been highly successful with them for more than a decade. MST is a pass for me. Too risky, untested, and from a new gimmicky firm that I don't trust. But I'll admit, it is unique and it could work out. You just have to go in knowing that it's far from a guaranteed success and whatever you put in might disappear. Poof. In our next video, we're going to review popular covered call ETFs. So make sure you subscribe so you don't miss it. And last thing, we do have a Discord with over 400 members. It is free. Check out the link below if you want to join. Thanks for watching, and we'll see you in the next video.